Hello, and welcome to the Market Bull Podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Today on the show, I spoke with Justin Huhn, the founder and publisher of Uranium Insider. Justin has established a strong following in the uranium sector through his coverage, news, technical analysis, and his network of uranium professionals. Justin talked about how he started learning about the sector and why he sees so much potential in uranium. He looked at the reasons behind uranium's recent price rise, the current stockpiles across the globe, and what the established players are doing in the market. The investor sentiment towards uranium is shifting, and Justin shared his insights into the new managed funds being launched this year following uranium. Justin also shared some helpful resources that he utilizes to stay on top of uranium news and movements. So hello and welcome to the Market Bull Podcast. I'm your host, Ben Kostridge, and joining me on the show today is Justin Huhn, the founder and publisher of Uranium Insider, which covers, I guess you can say, uranium. Welcome to the show, Justin.
Thanks for having me. Happy to be here.
So talk to us a little bit about your story, because you've amassed this pretty insane following in the uranium space and do a lot of coverage and talking about uranium. But to get into that and even to pick that commodity, where did your passion for covering uranium come from?
I think it was a pretty gradual approach, a gradual process. I first discovered I guess you could say, the investing thesis for uranium equities and nuclear energy, just generally speaking, back in 2016. And it was actually within maybe a month or two of the bottom for the commodity. It was just under $18 a pound. That was late 2016. And it kind of intrigued me at the time. Prior to that, I had been primarily a technical trader, kind of momentum, trend following trader, trading breakouts, breakout patterns. And I had done that for quite a few years, relatively successfully. Hadn't really done any sort of deep contrarian fundamental based investing up to that point in my life. And this thesis was like, that's really interesting. Here's this pretty profoundly positive story. It's this sector that everybody hates. Nobody cares about it. The commodity is totally bombed out. At that point, it had been through 5 years of a bear market. Little did I know it would be almost another 5 more years, generally speaking, for the equities. Even though the commodity bottomed, it takes a long time for that gigantic ship to turn.
Yeah.
But part of what intrigued me was the more that I learned about nuclear energy, the more I realized that my understanding of it was just full of misconceptions. And just, prior to, obviously, that 5 years prior was the Fukushima Daiichi accident. And at that time, I remember being very scared and very influenced by what was going on in the media and thinking, oh my gosh, there's 400 more of these things on planet Earth. We are absolutely doomed, whatever, just like doom and gloom across the headlines.
Yeah.
And I knew nothing about the history of nuclear, knew nothing about the incredible safety record, despite a couple of meltdowns. And so that I always enjoy it when a belief system of mine gets turned on its head. I don't know why. That's just always something I've really enjoyed. So I like finding out how I'm wrong about something and being humbled by that. And so this was not only an opportunity for a contrarian investment that is patient and long-term and low stress, but also just the studying of the sector just continued to light up light bulb after light bulb for me. And I really enjoyed that. I still do. The news flow is daily. I'm reading about it constantly. I'm talking to people in the industry all the time on a daily basis. And I just love the sector that I've found myself involved in. And it's a feel-good investment. I am fully in support of the expansion of nuclear energy, simply from a scientific and humanitarian standpoint, even if for whatever reason the investment doesn't work out, which I don't know how that would be at this point. But hey, anything's possible. I'm still an unabashed supporter of nuclear. So that, the process has been ongoing and gradual, but it's been an absolute blast. I've made a ton of friends, and I love just being in this sector and love supporting it. So just really over time, I guess you mentioned the following. I think that has, I don't know if it has everything to do with the amount of content or the quality content that I put on social media, or just the absolute passion and fanaticism of uranium investors.
Yeah.
These folks are very passionate people, very emotional beings. So yeah, I don't know. I connected. I was on Twitter already for other investments, technical trades, and crypto investments at the time. This is back 2015 to 2017 ish. Um, and I discovered a very small uranium investing community on Twitter. I started to connect with those people, ask a lot of questions. The more I researched, the more I realized that I was really one of maybe a few dozen people on Twitter specifically that kind of understood more than the general investing public about the thesis, and that knowledge continued to grow. And as that knowledge grew for me, I would share it on Twitter, and I would write about it in long form and send it out to people's emails, and that sort of just very organically led to writing this newsletter and doing a paid newsletter. It actually came about because a handful of people that were subscribed to the free email that I had been sending out for about 18 months at that point were just like, Justin, we want to know what you're buying. You do a paid thing. You just sign me up immediately. So I was like, that's interesting. And I was already doing it anyways. I was enjoying it, and I liked the idea of just diving deeper and giving more value, rather than just kind of pontificating on thoughts around the sector and the investment thesis, and throwing that out there every week or two, but just diving in and making a bigger commitment to it. So that was August of 2019. Now we have a pretty sizable following, and I've got a small team working with me, and it's turned into just a really enjoyable enterprise, and very, very constructive still. Even though we've experienced one big leg up already and one big consolidation, the future looks incredibly bright for not only, of course, for nuclear, but for the investment thesis and uranium mining stocks as well.
Was an interesting point you mentioned before about inverting your perceptions of the commodity. I mean, when you were going through that rabbit hole almost of researching nuclear and uranium in particular, what were some of the facts that really jumped out to you that really shifted your perception of the commodity and almost encouraged you to go, well, hey, there's a bit of investment opportunity within that sector?
Well, it was first of all, I mean, just some of the basics was like it was a major shocker to understand that the nuclear energy sector was a growth sector. So even 5, 6 years ago, it was set to grow. And I was like, really? I thought we were abandoning this left, right, and center. No, it's actually growing. It's like, okay, why? So that was kind of a shocker. Then I started to dig into it, and it didn't take a whole lot of digging to realize that it's actually the safest form of electricity generation that's ever been conceived, period, the end. It is incredibly, incredibly safe. And that, of course, on top of, the fear that had been embedded into my psyche and everybody else's after Fukushima with all the news flow, that flipped my perceptions on my head. I didn't really have any preconceived notions around the commodity itself. I didn't know anything about uranium. It's an extremely abundant commodity. That was something I didn't know. It's basically everywhere I could go outside and dig a shovel in the ground, there will be some uranium in that shovel full of dirt. So it's very abundant. The nuclear fuel cycle, I had no idea about. That's kind of the next step of the research is it's like, okay, the sector is growing. Okay, it is safe. It's not all that dangerous at all. So what happens? The uranium comes out of the ground, and then what? So that process, understanding the whole fuel cycle is just absolutely fascinating. So yeah, not a lot of preconceived notions around the commodity itself, but just the nuclear energy sector as a whole. I didn't understand that it was a growth sector, and I certainly did not understand how historically safe and statistically safe it is and has been.
And shifting now to 2020 or 2023, there was real rises, and we saw that it almost broke out of this consolidation pattern. I mean, what were you seeing happening in the underlying fundamentals of uranium as that breakout was happening, and where do you see it sort of playing out now? We were saying there's clearly a tailwind with the discussion of energy shortages and what are we going to do to solve this, supposed energy crisis. It's afflicting all across the world, and uranium needs to be in the mix, but there's still this almost waiting moment or that the last straw to catalyze and force the commodity into a new trend. But I mean, what have you seen really move the movements in the commodity and elevate it up to where it's sitting now?
Well, basically, the previous decade following the Fukushima Daiichi meltdown in Japan, this really was what caused the bear market more than anything, especially in the equities and the commodity itself, was the shutdown of their entire fleet. So 54 reactors were shut down within 24 months. Germany shut down about half their fleet within about 5 years following Fukushima. They're now entirely out of nuclear. And so just uranium and every element of the fuel cycle, both the cost of the services of conversion and enrichment and the products of conversion and enrichment, which are uranium hexafluoride, UF6, and enriched uranium product, EUP, everything declined in price just because of that demand shock. So to understand how we turn that corner into a bull market for the commodity, you have to understand the depth of the oversupply. So really, you can look at it in a few ways. We had pretty drastic oversupply for about a 5-year period. That was, let's say, 2012 or 13 to about 2018, which is when McArthur River got taken down into care and maintenance. Cameco's very large mine in Canada. Paladin's Langer Heinrich got put on care and maintenance. Rabbit Lake got shut down in Saskatchewan. So we had multiple mines that were operating that went into care and maintenance or were shut down. We had multiple development projects that just got sidelined. And finally, we were back at sort of a balanced market, and in fact, in a slight deficit. And a lot of that above ground mobile inventory that was created by that oversupply from the previous decade could be worked through. So you have to figure a lot of the oversupply went to China. They built up a big inventory, right? So they're sitting on 300 or 400 million pounds of uranium, or uranium equivalent, let's say, in various stages across the fuel cycle. So ex-China, you have to figure 150 to 200 million pounds, let's say, of above ground mobile inventory surplus that had to be worked through before the natural demand of the industry came back to producers and we actually saw new price discovery. So the working through that supply was happening 2015, 2016, 2017. The commodity bottom in 2016 for U3O8. But in cost of enrichment, SWU, separative work unit, kept falling for another couple of years. And so we had to have Cameco buying a lot of uranium off of the spot market, which they did once they shut down, put McArthur River on care and maintenance. But we also had something called the carry trade, which is basically commodities traders, uranium traders will sign shorter term contracts with utilities. So if you're a nuclear utility, and you're sitting in a market where you've got $25 spot, $30 term price. Cameco is sitting here with an idled mine saying, hey, we're looking for 45 plus. You're not going to go and volunteer to pay 50 to 75% above the market price just to help your bro out up in Saskatchewan to keep their mine, to get their mine back up and running. That's just not something that is done, despite the hardships of the producers during this period. So, Cameco, they were spending, what is it? I think it was pushing $10 million a month or something like that in care and maintenance fees, just keeping this mine idled. They had to retain a decent staff. They've got freeze walls. It's very complex. But you had these traders that instead could go ahead and sign a 3, 4, 5 year contract with the utility. They would take it at basically the spot price would be kind of like a base escalated price. So you would have the spot price, you would add in expected inflation for the delivery period, you'd add in interest rates, you'd add in a bit of profit, and then you would sign that contract and the trader would go out and procure those pounds on the spot market, hold it on their books and deliver to the utility. And utilities did this hand over fist for 5+ years, very high volume. And didn't go and talk to the Paladins and the Iranos and the Camecos of the world to sign contracts at $45+ a pound. They just didn't do it. They did this carry trade. Well, that carry trade, in combination with Cameco's purchasing on the spot market, worked through a lot of that supply. For multiple year period, a lot of that supply was worked through in these shorter term contracts and spot market buying. Fast forward a couple more years, we have the advent 2021, Sprott Physical Uranium Trust comes online. They have an ETM vehicle. For the previous, 2005 to 2021, previous 16 years, Uranium Participation Corporation had purchased a total of 18 million pounds. This is a physical fund that operates as basically like an ETF. You just buy it in the open market and they purchase uranium. Well, Sprott took it over, did an ATM, which means they can issue shares into the open market whenever they're trading at NAV or a slight premium to NAV. And they came online August of 2021. And within 18 months, purchased, no, that was even faster than 18 months. That was less than 12 months. That was September 2021 to April 2022. So 8 or 9 months,
Jeez.
they purchased more than 40 million pounds of uranium in that short period of time. And that really consumed a lot of the whatever was left, just above ground mobile inventory on the spot market. They chewed through that. And some of these pounds that were held by carry traders on their books for future delivery to utilities got shaken out because the market got so backwardated. The spot market just flew up much higher than the
Accelerated.
They sold the Sprott, and then they went and they covered with a midterm contract from the Kazakhs or the Uzbeks or BHP, whoever it might be. That offered a little bit of a buffer for liquidity, maybe 15, 20, 25 million pounds from a reverse carry trade. That's all to say that it took a very long time for the industry to work through all of that above ground mobile inventory that was just loose, sitting in a can at a conversion facility. Now we have basically a few producers that are consistent producers that sell some of their production into the spot market on a relatively consistent basis. It's relatively low volumes. On average, we're looking at maybe 2 or 3 million pounds a month, but there isn't this massive amount of inventory just sitting there waiting to be sold down. So now we've seen the commodity bottom at just under 18 bucks a pound. We're sitting right now at $54 a pound. It's made a very solid move to the upside. But the cycle of long-term contracting for utilities is literally starting right now, and that should be a multi-year cycle. So it's a very unique time from an investing standpoint because it's so de-risked. The only way this is a contrarian bet now is if you're looking at the equities relative to the setup. It's not contrarian any longer to look at the sector and to forecast where the sector is going to go. That is relatively easy to do because you can see what a small volume of purchasing does in the spot market. It moves it a lot. So it's so de-risked right now. There's just not a lot of supply, and it's all coming to a head. And the equities have pulled back significantly from their high print after that first leg up. So I think we've got bargain basement prices on the equities and an incredibly de-risked outlook for the sector going forward and the commodity itself.
Yeah, well, and I keep flashing it back to, just the perception that it's completely shifted over the past few years. And I mean, even looking at the way and the need for energy, uranium's got to be in the mix, and you can just see the adoption is clearly coming into it. But the investment and the supply and demand, the basic terminology of that means that really that there's got to be some movement to the upside for uranium. But I mean, you're saying that there's a lot of mines that have been on maintenance and holding. When you're looking at like the big picture players in the uranium space or the nuclear space, where do you see those countries really accelerating now? I saw, Japan has now switched their tone. They're restarting their nuclear reactors. So clearly they're getting back on board with it now. And I know the technology's advanced so much. So, you mentioned the safety component is even higher than where it would have been previously. But where do you see the big players coming into this space?
In terms of production?
Yes. Yeah.
Well, that's a really good question. The uranium mines notoriously take a very, very long time to go from discovery to production. I mean, sometimes north of 20 years. It depends on the geology, depends on the jurisdiction, et cetera. Right now, we have McArthur River just getting restarted. They're probably going to hit that full production level in 2024. They'll probably get close to it this year. Langer Heinrich, Paladin's mine in Namibia, is in process of restart as well. They're looking at first production, I believe, in 2025. So as far as the care and maintenance mines, those are the two big ones that are coming back online. Well, Langer Heinrich is much smaller in annual production than McArthur River, but still. We've got a couple of greenfield projects and brownfield projects. The brownfield, we have Boss Energy's Honeymoon it's going to be a slow ramp up, but their goal is 2.5 million pounds a year after 3 years after the restart. We've got companies like Peninsula, Encore Energy, UR Energy, Energy Fuels that all have ISR mines in the United States, and they're all working towards production. Even with all of those companies getting into production, let's say in the next 2 to 3 years, that's still, we're going to be lucky to see 5 million pounds come from the United States in that time frame. Cameco has kind of a phase 2 to Cigar Lake, which isn't going to be a ramp up, but sort of because that mine is technically kind of tapped out towards the end of the decade, but they've got sort of a phase 2 of that mine plan lower grades, slightly more difficult mining, higher prices necessary, but it's there. McArthur River, technically, they can get up to 24 million pounds a year from that mine. That's currently they're shooting for 18 million pounds a year with the possibility of ramping up to 24. Global Atomic's DASA in Niger, 2025 first production. That'll be, 3 to 5 million pounds a year once they're in full production. But, these greenfield mines, there's no guarantee on these things. And it's definitely risky business for utilities to invest. So they branch out, right? They spread out the risk. They're not going to get all of their needs from a greenfield mine, but some of these greenfield projects, they have signed contracts. Encore Energy has signed contracts in the United States. Global Atomic has signed contracts, and there's a few other brownfields that are coming online. I'm probably forgetting a couple of them. Then you have Orano, which is the French state-owned nuclear company that has uranium mining, conversion and enrichment, fuel fabrication. They got the whole 9 yards. They're developing an ISR project in Mongolia that is supposedly going to be producing by the end of the decade. And the Uzbeks are ramping a bit. They're shooting to double their production by the end of the decade. That'll be another 7, 8, 9 million pounds. The Kazakhs say that they're shooting for 10% below their subsoil use agreements, which is a decent little jump in production. And they've got the deposits, they've got the geology to ramp. It's just a matter of kind of workforce and price incentive and sulfuric acid availability, et cetera, et cetera. So a lot of potential for supply.
Yeah.
But if you go out a few years, based on the demand that does not even account for secondary demand coming from the investing side, the financial driven vehicles, or counting, let's say, small modular reactor demand, that's still just a potential, but all signs are pointing to this is going to be a thing. We're still in a pretty large deficit, even going out, 3 to 5 years, with all of those proposed mines coming online on time and on budget. And of course, the elephant in the room would be NextGen's Arrow, just a gigantic deposit. And Canaccord put out a piece last week expecting first production in 2027. That seems very, very optimistic. But who knows? The Chinese can build a train station in 9 hours. So if the motivation and the money is there, perhaps, and the support from the jurisdiction is there, maybe. But they've got to build a mill. They've got to build an 800-meter deep underground mine. They've got to build roads and infrastructure. No small undertaking. So 2027 seems very optimistic. But even with Arrow and a McArthur River ramp and an Uzbek ramp and a Kazakh ramp and Langer Online and Honeymoon producing and 5 million pounds out of the U.S., all of that, we're still in deficit by the end of the decade. So it's a pretty wild setup.
Well, it paints the picture for the commodity and the sector, which then ties into the idea of the investment drive. And I've seen you talk about it previously, some of the funds and some of the movements in money. I mean, what are you seeing happening in that regard into backing this sector and seeing big players starting to invest back into, all facets of the sector?
It's one of those things that if you were to create a supply and demand model spreadsheet, let's say, to do so responsibly, you would model out for zero demand coming in from the financials, because it's impossible to predict what the capital markets are doing. But if you look at what is happening, the funds continue to show up. So there's a new fund, this Zuri Invest fund, that is commitments for investment have to be closed by tomorrow, as this recording, which is Thursday, May 25th. Or I guess it's Friday for you, actually.
Yes.
So today. So that's closing today. There's at least 2 or 3 other funds that I have heard of that are in the works of launching physical uranium funds of some form or another. I don't know how they're going to be structured. I don't know what the model is going to look like, but they're not showing up for no reason. So Zuri Invest, for example, I've spoken multiple times to Bram, who's a uranium trader, and he's involved in this vehicle. And he's like, we wouldn't have done this if we didn't know there was investor demand. So it was kind of like the investor demand was there first, and that sort of kind of spurred on this idea. So, show me the incentive and I'll show you the outcome. And the incentive is being built as we speak, in addition to the already existence of Yellowcake and Sprott Physical Uranium Trust. So I mean, I
Okay.
hate to throw out predictions of what's going to happen,
Yeah,
but
yeah,
it's not going to be nothing. Let's just say
yeah,
that.
naturally.
Honestly, because I've grown to really actually care about this industry, a severe price spike for the commodity is not really all that good for the industry. It's great for speculation. It's great for investors that are quick on their feet, but it's not very good for the industry as a whole. So part of me, the greedy speculator in me is like, yeah, we're going to see a price spike and it's going to be glorious. And then the part of me that loves this industry and wants it to grow and expand is like, I really hope this doesn't
It
just
doesn't happen.
skyrocket to $200 over the course of 6 months,
Yeah.
And these vehicles are being set up, and the market is so thin that is not out of the question by any stretch of the imagination. So, if capital markets go severely risk on and the investing side smells blood, you know, no, there's no price that would surprise me really. I mean, if you inflation adjust the peak of the previous market, you're already at $200 a pound, and that sounds like a really high number as we kind of chop around in the 50s here, but it really is possible, and there's not a lot of supply in the spot market, so it's not going to take a whole lot to really move the price.
So then what's really going to potentially get in the way of the price? I mean, I always look to, really government policy and structure around adoption and even usage of, because that's going to have a huge play in where the commodity goes further. So are you seeing any switches and changes between geopolitical sort of opinions on it? I mean, looking at, as we said, Japan, I know France is a big user of nuclear, sorry, the US, but do you see other players or even other countries adopting and changing their legislation, which will then encourage the faster adoption and rollout and we say drive investment decision making?
For mining uranium or for building nuclear?
Building nuclear.
Building nuclear. Well, we've definitely seen a number of pivots in the positive direction and a couple in the negative direction. And even one of those, so Germany is the obvious example that, well, they haven't pivoted negatively, I guess, since they made the decision, the German Greens back in 2012, if I recall correctly, to phase out nuclear, and they've stuck to their guns on it despite the actual results on the ground of that decision. So that's one shining example of what not to do, really.
Yeah.
And the results are there for all to see. They've got an extremely dirty grid. They're highly reliant on coal now, and their citizenry is paying very high prices for energy. Belgium had recently shut down a reactor. They had another one slated to shut down. They pivoted to keep that going. That is still working its way through legislation to remain online. I'm forgetting the name of that plant. So that one's kind of in this liminal space. But I would say the biggest stories are Japan. Their most recent, the current prime minister has definitely accelerated at least language around restarts. They're now shooting for 20 to 22% nuclear by 2030. That's a lofty goal for Japan because they've been they're a very cautious nation, very cautious people, very respectful of each other. They don't want to push something on the people, and they have a lot of elements in place for these restarts. For example, they have to have like a majority in favor vote of all of the population locations within a certain diameter of every plant that's proposed for restart, right? So they have to, all the surrounding communities have to be in favor of it. They're not going to force it down anybody's throat. Even with that said, we are expecting 3 restarts this year. Only one has happened so far. The other 2 are hitting yet more delays. But 20 to 22% nuclear by 2030 means another 20 restarts, and they've restarted 11 at this point. So, not holding my breath there, but again, looking at the anecdotal evidence, they're looking at collaborating with the French to continue building out a fuel reprocessing facility. This mixed oxide MOX fuel is utilizing spent fuel for new fuel. They're looking at actually new builds, building new SMRs. The population of the country is in favor, majority of restarting nuclear. So all of the signs are pointing towards more restarts. We've seen evidence of a number of Japanese utilities actually looking into signing long-term contracts again for uranium and uranium services, nuclear fuel services. So all the signs are pointing towards that will continue. South Korea's new president did a complete 180. They had a nuclear phase out policy, and he said, yeah, we're not doing that. In fact, the construction project that was halted in 2017, not only are we restarting that, we're going to accelerate that. So the South Koreans did a full pivot. The United States has really, really surprised me, honestly, because absolutely nobody had new nuclear in the US on their bingo card at all over the past 5, 6, 7 years. I mean, and even longer. So we've only built one nuclear power plant in the last 20 years, and that was just connected to the grid over the past couple of months as the Vogtle plant in Georgia. But half of the nuclear utilities, the majority of the utilities were recently polled, and half of those that were polled are looking at building new nuclear. And so we've got this Inflation Reduction Act that was passed last year. It has clean energy investment and clean energy production tax credits that fully de-risked the existing fleet, the largest fleet in the world, and also is incentivizing these utilities to actually look into building new nuclear. So much so that the Department of Energy has done two unbelievable things in the past 12 months. One, they did a full study of existing and retired coal power plants in the United States. And basically, this study found that 85% of these sites are viable for the implementation of SMRs in place of the coal plants. That was the one thing they did. Then just a couple of months back, they put out something called a liftoff report, where they're actually looking at, okay, if the United States is to accomplish some kind of net zero, something resembling a net zero goal by 2050, what does that look like? Part of what that looks like is a tripling of the nuclear fleet, adding 200 gigawatts to the existing 93 gigawatts that are in the country right now. So, of course, in the United States, there's unbelievable bureaucracy and red tape around these things. Yeah. And this is very wishful thinking, let's say, but to actually see bipartisan support of something, of anything, but of nuclear, is fantastic. So I'm celebrating what they're shooting to do. And France is looking at, they totally canceled their nuclear reduction. They were shooting to get back down to 50% nuclear. They ixnayed that. They're looking at building new nuclear, both SMRs and large reactors. UK is building new nuclear and expanding. Russia, and of course, China. China's the big one. They've got 53 gigawatts now, and they're shooting for 150 gigawatts by 2035.
Yeah, there's undoubtedly movements, and that's the question I've got is where do you find all this? And I'm sure, for people that want to learn more naturally about yourself and where you seize all this information, I mean, I know you've got the newsletter and you've got website and daily content or weekly content, at least across a whole different range of channels, but how can listeners learn more about it? Because clearly you're on the pulse of all the movements that are happening in uranium in that space. And clearly, you've been there for a while, so you know your stuff. So where can listeners go to access this information from you?
Well, I do a free podcast on YouTube called the Uranium Market Minute. I haven't been doing it as frequently lately, but I will continue to do it. That's one source. Some of my sources, I'm happy to give some of those away that are free. So the World Nuclear Association is an unbelievable resource. That website is a wealth of information. Multiple times a day, I go to Google and I type in WNA and fill in the blank. And it's updated very frequently. Usually within 30 or 60 days, whatever subject you're reading about has been updated factually and statistically. Absolutely fantastic. So highly recommend checking that out. Then there's sources like, UXC has a free account you can subscribe to. We subscribe to one of their paid products, which is a weekly publication. It's very thorough. It's very good. That gives us a lot of industry information. World Nuclear News puts out a daily email. They also have a Twitter account. So every day there's 5 to 10 stories that they put out on Twitter or via email that keeps you abreast of anything from uranium mining company developments to actually new nuclear builds or shutdowns or geopolitics, whatever. Very thorough. And I would say lastly, there's so much content, not only on Twitter, but just on YouTube, just from myself and others like me that are speaking about it. But really the real solid quality material that we have access to has to do with our network of connections in the industry and maintaining those friendships and connections and talking with those folks, every week. And that's really where the real, I don't want to call it insider information, but the stuff you're not going to get from WNA and World Nuclear News or Twitter even is the people that are really digging into the sector and talking with the fuel buyers and talking with the uranium traders on a weekly or monthly basis. That's where you get the on the ground kind of detail of what's happening in the physical market. So that's really where we focus on, is that physical market more than anything.
Awesome. No, there's some great resources there. And yeah, I would recommend any listeners go check out Uranium Insider, because there's a whole host of information. You're on Twitter, you're posting quite frequently, and yeah, YouTube, you're peering all over the spot. And as we said, the fact that you're getting more inquiries means that, there is a bit more interest and a bit more sentiment shifting again back towards uranium. So it's a good thing. So thank you for joining me on the show today. I look forward to speaking with you in the future and seeing what's evolving and what's changing, because I can imagine, yeah, as we said, it's got to prove it, but there's a bit heating up in this sector. So yeah, thank you for exploring that with me today.
It's my pleasure. Yeah. And I would be remiss to not mention John Quakes on Twitter. He's fast. So I have Google alerts set for different keywords, and oftentimes I will see his tweet before the Google alert even triggers. So he's kind of an aggregator of all things uranium and nuclear news. Really, really high quality follow on Twitter. And if you follow him and you follow me on Twitter, you'll just get plugged into the whole, the world of who to follow in your twit. So a lot of great information there. I mean, it's not just kind of this fun little social media thing. It's really fantastic. You can have direct message conversations with people with hundreds of thousands, if not millions of followers, and a lot of influence in the industry, and great information. So definitely recommend, if you're watching this and you're not on Twitter, you should be there, if just to follow, uranium and nuclear news. Yeah.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.